Hello, now earnings season is coming up and I begin with Tesla and Netflix. So I will show you how I did with the Iron Condor on these two earnings. One was working well, the other one, well, needs to roll over into August. Okay, have fun. So the first Iron Condor I did on Tesla when Tesla was traded at 299. This is maybe exactly what is a bit dangerous, that if we trade the stock, the Iron Condor, during the stock market, let's say there's another 7 hours to go. So as one conclusion I figure out is that always trade at Iron Condor of earnings just maybe 1 hour or 30 minutes ahead of the closing. In my example, actually, I did this Iron Condor with a credit of 0.88 and the stock was trading around 300, you see. So I took a kind of medium price between the put and the call. So as you can see here, and knowing that my maximum loss would be 162. Here are the closing prices of Tesla on this 19th of July. So you can see already that my delta put side is already far too high because the closing was at 291 from 299. So in other words, I already gave $8 just about the closing. So next time I know that I would have to trade at least around 292, 293, that my put delta would be as low as the call delta. At least I would like to have a put delta of around 20 to 25 on each side. See the opening price on the 20th, just after the earnings, which were below expectations. Well, actually, they were very good earnings, but obviously, market expected more. The opening of Tesla was 279.56, just slightly above my 275 put. So what I did is within the next, you can see 3 to 4 minutes, just right after opening, this is actually Swiss time, I cover my Tesla put side at 0.72, expecting that maybe it will go lower, and just on the sure side that I cover the call side as well. Well, somebody would tell me this is not really necessary because they would expire worthless, but I just wanted to close the whole thing with here 75 debit, and I have a small profit of 0.09 because I include a commission of $4. But what I did is, as I think that Tesla, it was an overreaction, that slightly after, you can see here at 337, I said to myself, okay, when Tesla was going a bit up or down, I do a new vertical put spread. This time gives me a bit more time. You see here, I would have only 1 day left. It gives me more time, so I have a 15 days left of a 270, 267, and I get really nice 0.9 credit, expecting that the stock will keep around this 270. But as you can see now, the Tesla actually went down to 61, and I think we are even lower. So I will look now what's going on the next 10 days. I just still believe that Tesla will recover by that time, or I would do another rollover. But you see, this is a bit the risk. I could close the deal right away and have a small profit, but seeing that, I think when the news are out and I think the stock would recover, okay, I did this new transaction, and knowing that my maximum loss would be $160. So I have just tried, and maybe looking back, would maybe not necessary to do this transaction. See here that actually I did an Iron Condor of Netflix as well, because I know they will have earnings as well. And you see here I did that about 5 p.m. This is about 1.5 hours later after the opening. Again, I didn't wait because I thought I do this and I get a 57 credit. But you can see here that I had a real wide range of Netflix, because at that moment Netflix was at 476 and the closing was 477. So in other words, it was really good that Netflix keep this level throughout the market. And here you can see the closing prices of my Netflix options. And you see this is very nice. Both sides have a very low delta. In other words, this is really what I'm looking for, that none of both sides would be touched because I have a range of 400 to 580. So whenever the stock trades between, let's say, 450 to 430, I'm still in a very comfortable situation. The other thing is what was interesting, that there was a kind of skew on the call side. In other words, I get really nice premium on a 580 call. Call actually gives me more prices, so it allows me to do even a bigger spread. Okay, I can say if really Netflix would jump out of to 600, my maximum loss would be 943, but that's only on the call side, because on the put side, you see it's limited to 500, so it would be 443. As you can see, the opening of Netflix again, the earnings were below expectation, was at 446, which was perfect. Again, it's between 400 and 500. I mean, this is perfect. So what I did is I just closed the put side, because even then I thought it could possibly that we would lose another 10%, and I don't want this Netflix, so I closed it with a 0.03 debit. The call side, which was this 580, I didn't do anything. I wait till the option will expire worthless. So my profit was actually 0.5 or whatever per trade. I just even include this 4% commission. Then what I did yesterday, because I think Netflix is really now going down and again down and down, and I think they will certainly find a level. So I did a kind of 400, 395 call, put spread, as you can see, and I get one credit as a new trade. And the closing price is that Netflix slightly went a bit lower, but you can see here my delta is around 25, which is okay. So we will see. I have here time now, 27 days. Hope that Netflix will find a button around 400, and then I would get this 100. Here again, my maximum loss would be 400 because I get 100. So I think this is an idea to do a kind of rollover by my side. I could close the position. I could maybe just take the profit and don't do anything. But I think always when a stock is losing up to 10%, sometimes there must be a rebound, just a technical rebound, and this is what I'm looking for, as well as for the Tesla. This is very important that you analyze your trades every time and you say to yourself what can be improved. So first of all, you choose your convenience strategy. I always would use an Iron Condor of stock earnings, always that it can go on both sides. But at the moment, you can see how fragile is the market in the technology sector. Then if Netflix or Tesla, and now next week there's Google, there's Meta, there are so many. So I think it's better you choose both sides, but again, you choose an Iron Condor with a less of 20 delta, or at least outside the expected range. C implied of volatility. Remember, you have always the plus minus expectation range, so you really go as far as possible. Maybe the premium is not so high, but still being on that good side, like I did in Netflix. What I always look is what is the premium of the put and call side. Like we saw this Netflix trade, that actually the call side gives me even a more premium than the put side. So it's always that I add a bit the call side in a way that I have a higher risk on the call side than on the put side, because always these prices were higher. So we can say the market expected actually higher prices, but actually they were really on the wrong side. So this is what I'm all look, because theoretically, if you really make an Iron Condor on both sides, it must be the same price of call and put. But if you see a skew in it, then it's always that you maybe adjust a bit the strike because you want to have more or less the same premium. So again, you look about this 20, less than 20 delta, or you adjust slightly maybe by just 5 ticks up and down the strike. That is now important. Trade about 30 minutes before the closing of the market. Obviously, I did it now far too early. In Netflix, it worked out because the stock didn't move the whole evening. But in Tesla, there's quite a big move from 299 to 291. I mean, this is almost 3%, which actually I lost on the put side. So if you have really a liquid stock like Tesla or Netflix, you can do this Iron Condor just 30 minutes ahead of the closing. It should be no problem because you want to have an Iron Condor with a closing price which is just the actual price because of the level of the next day. So this is what I would recommend you. Do it 1 hour or 30 minutes before. On the earnings day, I mean on the day that the earnings are out and then the stock opens, I would recommend you to close the position as soon as possible. I mean, you see the fluctuation again of Tesla. Again, it should be possible to really enter that because it's a very liquid stock. You can really close the Iron Condor, or like I did it, you don't close the whole Iron Condor, you close first the put side and then you close the call side, because it's obvious that you close that side which is maybe more in danger to move than the call side. I mean, it's always the call side, I would not even have to close it, but it's always you focus on those risks you may have because the stock came down, right? Tests on Iron Condors on earnings on Tesla. So other ones will follow by next week. We have Google, Microsoft, and Meta. So I will do again these Iron Condors. It's interesting to see a bit all this trial and then look what is successful. Always out of 10 Iron Condors, you should be successful around 5 to 6. Maybe on 2 you may do a break even, and maybe 1 or maximum 2 you may take the full loss. But let's see, and I will show it step by step for you. Okay, so far so good. Take care. Bye bye.